Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG, and on behalf of KPMG and Airline Economics, I'm delighted to be joined by Olivier Trauchessec. Olivier is the Head of Global Aviation with MUFG. He's joining us for the purposes of our Aviation Leaders Report 2024, and I should say we are recording this in New York in mid-October. Olivier, thanks so much for giving us your time today. Before we get into the meat of the conversation, do you want to tell our watchers a little bit about MUFG's place in aviation finance?
Sure. So good morning. It's good to be here. And yes, I mean MUFG is, as you know, one of the powerhouse in aviation. We've built a business over the years, and we really one of the most active banks. The market position for us is really, or the product offering is to be a solution provider for all our clients. So we really try to be very constructive, and creative on with all our clients and find a way to help them grow their business. Over the years, we've built basically the full capabilities of aviation products. We're a bank who's comfortable to lend, basically. So we use our balance sheet, and we are here for our clients. We have the full suite of products, basically, from capital markets. We structure ABS, EETC. We do warehouse facilities, bridge loan. We try to help our clients on the large M&A activities, when they need acquisition financing. We've been pretty much involved in all the recent M&A activities. We can do, obviously, like the vanilla aircraft financing, corporate facilities. And like where we've really grown the business is on more what we see. Sometimes you hear about the specialty lenders. So we have a specialty lending activity where we acquired DVB Bank in 2019, which was a transformational transaction for us, which allowed us to continue this increase in the credit appetite for the bank in aviation. And so we've been able to do more structured transactions, asset-based financing, where we can, for example, finance aircraft off lease, do cargo conversion facilities, do like stub lease financing. So there's also this specialty lending activity, which is really key for us. That's who we are. We've been very active for the past 3 to 5 years. During COVID, we were here for our clients. We financed close to $3.5 billion between March 2020 and September 2021, and continue to be very much here for our clients.
And when you talk clients, does that include presumably both the leasing population and the airline
Correct.
population?
Absolutely, yes. So we do work with both the airlines and the leasing companies. Like historically, maybe like it's been slightly more like leasing companies, but very much here for our clients as well, the airline clients, and we've done another transaction recently, like JOLCO transactions, term financing, and engine financing as well. So yeah, we have the full spectrum.
Yeah, and maybe we'll start on the airline side. We've seen like travel bounce back very strongly. Your perspectives on airline performance, maybe coming through the course of 23, and just your expectation and outlook maybe over the next 12 months on that front.
Yes, the airlines are really continue to be in a strong position. When we talk to our airline clients, we find that they still feel good about their position in terms of traffic. People are flying, and it's so interesting. I find like you almost wonder like if after COVID people have realized how much they were missing flying, and how it's become almost like structural, that in their budget, people have, they want to spend money for a special experience, right? They want to see a Taylor Swift concert, they want to see, go to a nice restaurant, and they want to go places, right? They want to fly, basically. So it's very much like in their budget now. They're willing to use like a portion of their disposable incomes for flying, and it feels like it's here to stay. Maybe like corporate flying has not quite come back exactly where it was before COVID. People have found ways to fly maybe or to do business differently with like remote like video, etc., WebEx, etc. But fundamentally, yeah, the traffic is very good and the yields are high. The airlines like are still obviously having some issues. We do see like fuel price is a consideration, and with the current situation in the Middle East, there's questions on whether it's going to continue or maybe get worse. There's like geopolitical issues broadly, not only for fuel price, but like between the war in Ukraine and obviously in the Middle East is very much a concern for those airlines who are flying in the region. I think when we talk to our clients as well, there's concern about generally inflation, and their cost structure. So how do they adjust to a high inflation environment? There's some regions where inflation remains still very high. So you need to pay your employees in a way that they can live in the country with high inflations. So that's there's cost pressure from that point of view. And then aircraft availability, as we all know, is very much a concern, right? Like airlines are struggling to find aircraft, extending their leases, etc. And that has also a cost implication. So overall, I think the situation still feels good. We don't see sign of softness. Revenues continue to be on the rise, good cash levels. But like this cost structure and the high interest rate environment, obviously, for the airlines is a concern as well.
And when you look at it then on the opportunity side and you're looking at your current customers or potential customers, is that being driven by certain geographies, or is it more looking on the particular qualities of an airline regardless of where they may be based?
No, so for us, we do business everywhere in the world, right? We have clients in all regions. And to be frank with you, we do a business screening every week. We had this morning we had like 2 transactions that we are considering in the Middle East, right? So that's where we want to be, right? We want to help our clients, especially when there's difficult situations like that. So you're going to see us going forward like be very creative and constructive with our clients. There's no region which are excluded, and there's just like a different way to structure transactions, right? Maybe you adjust the loan to value, maybe you get insurance, maybe you do like a shorter transaction. Yeah, we try to be creative from that point of view to be and really assist our clients basically.
You mentioned the supply side challenges, and we can really look at how they're happening from an OEM and an engine perspective that are potentially leading to probably a dysfunctional trading type environment at the moment. Can I get your thoughts on how those challenges are impacting on your business as clients either struggle for new lift or struggle to access metal in the secondary market?
So for us, we see a few things happening, right? Like first, like because there's like a positive evolution with when there's less availability. It's good from a lease rental factor point of view, right? Like the issue we had like after COVID is that there was like a lot of aircraft availability, and like the lease rate factor was still low. Interest rates were going up, and there was this disconnect between increased interest rate and lease rate factors for the leasing clients. So we were under the impression that some of the lessors had a hard time translating high interest rate like of their cost of funds into like a higher lease rate factors. Now finally we're seeing that, so we're hearing because of this lack of availability of aircraft, like lease rate factors slightly increasing for new aircraft, even for the better credits, and for the older aircraft. We talked to a lot of leasing companies who were looking at maybe taking care of an aircraft would become old that when it was 18, 19 years old, they would start thinking about parting out an aircraft or maybe leasing the engines. Well, now people are really considering extending the aircraft. Like they have a lot of requests for lease extensions and maybe like to operate an aircraft past 20 years, maybe to 25 years. So it creates like a good situation. I think it should help on the for the financing of older aircraft, which we are active with as well. We can finance old aircraft. I think it's going to help the aircraft lessors also in terms of like on the asset side of their business. They'll be able to dictate, quote unquote dictate, because you can never dictate in this market, better aircraft lease rate factors. And on the airlines, well, I guess like I was saying, a bit like a higher cost, but still manageable for them, I would say.
Yeah, and maybe coming back to a point you mentioned around interest rates. One, curious on your outlook on that front. Are we in a higher for longer period now? Mm-hmm. And two, your perspectives on what that is driving in the aviation finance world.
So definitely a concern here. As everybody knows, like the interest rate, like the 10-year treasury is close to 5%. People are starting to wonder, is the high rate environment going to continue for a long time? So look, my guess is as good as yours. Some people think that the rates, the more optimistic, right, are going to say that the rates will come down. People who are more conservative will take a view that you need to be ready for a high rate environment for a long time. So that's the way it affects our business. That clients come to us so there's been less capital markets issuance. We're starting to see some. So we're starting to see more DCM, high grade, high yield issuance. Most of the investment grade lessors have been issuing now, and high yield lessors also are issuing. So if you take and then we're seeing some ABS. So if you look at each market, right, the high grade market. Most of the leasing companies who are investment grade have like debt stack which are substantial, and like they've issued significantly before the high rate environment started. So even if you issue right now at a level that's higher than what you used to do, it still makes up for a small part of your capital of your debt stack. So that's still manageable, I would say, and progressively they're able to pass through like higher lease rates. So that should be okay. Then you have the high yield lessors, most like high yield lessors want to eventually make it to high grade. So it's more like a transition period where they're doing it so that they have like more unsecured debt.
It's an investment in the future, effectively.
It's an investment in the future, exactly. So we see that even if you end up paying like 8%, that's okay, because eventually you will refinance and you'll become a high grade with lower rate. And then we're seeing some ABS activity also finally coming back, but also in certain specific situations. And we think that like maybe in Q1 or Q2 next year we'll see more ABS activity. So, sorry, it's a long way to respond to your question on the high rate. I think people need to adapt to a high rate environment, right? And for me, I would take the view that it's probably here to stay, and you need to adapt your business to make sure that you can survive in a high rate environment.
Yeah, and you touched on a lot of the funding sources there. Curious as to your thoughts on the overall health of the aviation finance market, and that is bringing in traditional aviation lending, capital markets, structured product, and it probably include things like tax products like JOLs, JOLCOs, and then the alternative lender class. So as you look across the piece, how do you assess the various health of those markets?
Overall, all the markets are reasonably open. if you start with the bank market, right? There was concern during COVID that banks would exit the market. Some did, or some reduced their activity, became like much more conservative. And it has happened. Like the banks who are really like us, very focused on aviation. We almost saw COVID as an opportunity, right, to demonstrate that we could be there for our clients. So we, like I said to you, we did a lot during COVID. A lot of banks now are coming back. Even banks whom we thought had exited. It tends to be for situations where maybe for better credits and better aircraft. But surprisingly, we see also some banks like doing maybe second-tier clients. Some banks doing maybe like portfolio financing, which we thought would have been more challenging. So there's like clearly like what people were expecting, like an exit from a number of banks, has not happened, right? Like the bank market is still very strong and very available for clients. Specialty lenders, I think maybe they were expecting a bit more the banks to exit the market. They were expecting a bigger dislocation from the bank market. So they probably have seen that the opportunity was not as strong as they thought. We do see some specialty lenders in some subset of the market, maybe for some older aircraft or some maybe situation, maybe second-tier lessees as well. That's also a market that we cover us as a bank. We do specialty lending as well. We're very active, so that's a product offering.
Can I ask you that? So when you look at that alternative lender class, it sounds like, I guess is it competitor or complementary? By the sounds of it, it's slightly competitor for you because you're effectively in that space.
Yeah, exactly. Yeah, it's competitor, but so we work with them as well. We syndicate some of our transactions with them. So because we view ourselves like a specialty lender as well, we work with them in good cooperation with them, just like we do with the other banks. Basically, I would say it's a similar situation there. And then we've seen like new players, obviously, like non-payment insurance, AFIG, Balthazar, and ACG and iFly. Good products, a good complement. So I view that almost as more like as a substitution to export credit financing. We do see a little bit of export credit financing selectively, but it almost feels like the export credit agencies are becoming what their initial mission was to be a lender of last resort, right? So that's what the export credit agencies are becoming now. You have like this private non-payment insurance which are active. We play in that sector as well. They can be very constructive in certain situations, but like everything, they need the banks as well, because like you need lending from the banks to get this guarantee from the NPI insurer. It's not and there's limited capabilities, right? The banks will not be able to do an unlimited amount of all those NPI products. So it's limited to a certain extent. So for us, we're always careful because there's often situations where we could lend, and we don't need the NPI, so we're being a bit selective like that. But that's a new market that's thriving and is working, operating well as well. Yeah.
And maybe looking at aircraft as an asset class, your perspectives on the strength of it as an asset class. We've had COVID probably had an outsized impact. Russia had an outsized impact on aircraft leasing, and we've had black swans, but many black swans. Your thoughts on how it sits maybe versus pre-COVID as an asset class comparing to others?
Well, I think it's COVID has demonstrated that the aircraft and engines are very good assets to finance. So the underlying clients are the airlines, right? And I think it's demonstrated that the airlines are so key for a country. During COVID, there's been like a massive support by governments, more than 200 billion of support from governments. The capital markets also were open during COVID significantly. So the airlines were able to survive. After a crisis like that, it's amazing to see the number of airlines that have disappeared is almost, it's very small. So you have to look at that. You need airlines. They need to operate aircraft. So the aircraft, yes, maybe there will be ups and downs, and you need to be ready for that. But if you can take a long-term view on an asset, you will be fine. And it almost becomes like an equity investment in an aircraft. Almost becomes like a bond investment. You get cash flows basically, and there's ups and downs, but over time, like the values of the aircraft recover. So here we have a situation where there's been supply chain issues, there's been manufacturing issues, so there's a shortage of aircraft. So the demand is very strong, but even in terms of crisis, if you can take a long-term view, I think it's a very good asset class, to invest in.
And maybe looking at big picture on the leasing market, we've seen it grow in importance as a financing channel post-COVID. We've seen the strength of relationships between airlines and lessors again probably develop strongly, and lessors maybe breaking that 50% proportion of aircraft funded, maybe even around mid-50s over the course of COVID. The counter to that is airlines are now generating a lot of cash, and maybe that immediate need for leasing could dissipate. Your thoughts on where that trend line goes? Does it keep up at that north of 50% and continue to grow? That's where the long-term trend has been, or does it start to taper out and maybe 50 is where we will land?
That's a good question. I think so. It's been increasing consistently for the past 5 to 10 years. Airlines like leasing. I guess when airlines like leasing from a flexibility point of view, right? Like from a lease, from a fleet flexibility point of view. But if you're logical with this approach, if you take this approach, you're going to say, well, I need to own some of my aircraft also because I want to have the flexibility basically. In a situation where there's like a scarcity of aircraft, I want to own my own aircraft, right? I don't have to worry to struggle for finding aircraft. So probably the current crisis is going to make the airlines realize that owning aircraft have some benefits as well. It's also becoming more expensive to lease with the current interest rate environment, and also because of the scarcity of aircraft. So it's the same thing. There's a cost. If the airlines, if airlines have a good amount of cash on their balance sheet and they can buy the aircraft on their own, and or find financing which is competitive, they're going to do that as well. The owning aircraft is also beneficial from a credit point of view for the airlines who are trying to get to improve their rating. The rating agencies are going to look at how many aircraft are unencumbered as well. So I would say that it's been increasing very fast. I don't think it's going to continue at the same pace. Maybe it will still stay above 50%, but there will always be airlines owning aircraft, paying cash for the aircraft, wanting the flexibility to own the aircraft, and to be sure that they have aircraft to operate themselves and not have to worry about a situation like today's situation.
And maybe keeping with the lessors and the importance of scale and your thoughts around whether that is increasing in importance. We've talked a lot around that access to debt capital and the importance that can come with being an IG rated lessor to tap that deep pool of unsecured funding. Do you think we are likely therefore to see a growth in a smaller number of larger players going forward, and that would kind of imply more consolidation? Your thoughts on that?
Well, that's interesting because as we say that, we keep seeing new aircraft lessors coming in the space. We've had new lessors in the Middle East, in the US. So there's no lack of capital on the equity side and new capital, right? So we see sovereign wealth funds who want to start their own leasing companies. Sometimes it's for geopolitical reason, because they want to grow their own countries. We see some private equity asset managers who want to start new lessors as well. And even if they have already existing aircraft lessors, so because it's, the asset managers often, manage like trillions of dollars, right? So they have like different pockets of liquidity, of equity that they can disperse. So the first trend that I would say now that which is striking is that you keep seeing like new equity coming in the space and new lessors, which means that the market may continue to be fragmented. Yes, I think we will see some M&A consolidation, but that's more like specific situations where you have some aircraft lessors who've had historical issues because of their financing structure. Maybe they took too much leverage. Maybe they issued bonds at the wrong time. Or maybe because they have not been able to grow enough. So that's maybe, yes, where you see M&A activities, like situation also where some lessors have not grown fast enough. And look, maybe it's because they were conservative, but at the end of the day, they're like, operations of 20, 30 aircraft. And then it doesn't make sense to have like a full platform servicing like 20, 30 aircraft. Like the SG&A is just too expensive. So in that case, yeah, you may see additional consolidation. So long way to respond to your question is, I think you have two trends in a way, like multiple new players coming in the space. But yes, some of the small players where you see a bit more consolidation. But if people who have 20, 30 aircraft and joining, like being acquired by larger lessor. But I think the market will fundamentally remain fragmented.
Yeah, and it may well be those that pay in narrow body, new tech, good credits need to be those big guys, right? To have that cost of funding. Mm-hmm. To bring you on to maybe the environment for a moment, and really interested in your thoughts on this as a bank, and whether or not when you are looking at your current financing activity, is it having an impact on your ability to lend depending on the emissions of an aircraft you're funding, a lessor you're funding, an airline you're funding? Is it having an impact now? And if not, when will it?
MUFG is part of the Net Zero Banking Alliance. We were very focused on the subject. We're in the middle of working on setting some targets for 2030. As part of that Net Zero Banking Alliance, you need to set the targets, which we will be publishing in the near future. So that's really top of mind for us. We went through an exercise of looking at the carbon intensity of our portfolio. We're using like third-party consulting companies to help us with that. And look, I mean, it's like everything. It's a balance, right? When we analyze like any transaction, we look at our clients, and like we have an internal rating from an ESG point of view. We look at the aircraft also, the emission of the aircraft, and we look at the structure, right? Like, can we include in each structure some KPIs to incentivize the clients to meet the target that they're representing, that they're going to achieve. So it's very much part of the analysis. I think you'll see us taking some actions and to meet those targets, basically. And you have to be careful on what assumptions you take, what SAF assumptions, etc. So we want to make sure that it's very realistic and pragmatic. But at the end of the day, we have a business model which is, the one that I described at the beginning, and we will adjust, slightly our business model depending on the circumstances. But we want to be able to help our clients again grow their business in a way that's consistent with the Net Zero Banking Alliance targets, and making sure that we are a good citizen, basically.
Maybe in closing, Olivier, as you look out over the next 12 months with, positive on the demand side, challenges on the supply side, what are your optimism levels like as you think about aviation and aviation finance?
Overall, I think that it feels like aviation has always been, right? Aviation has always been like that. You need to be ready for the next crisis. There's going to be a crisis. Is it coming up in the next year, 2 years? Is it in the next 5 years, next 10 years? I feel very good, at an institution like MUFG, because we built a business with all the capabilities to sustain a crisis, to be there for our clients during a crisis. So, we have an aircraft research team, we have an asset management team, we have an advisory team. So we'll be here for our clients for the next crisis. I think right now there's some uncertainty from a geopolitical point of view, but we've seen that before. It's nothing. It's nothing new. Overall, the airlines are doing well, like I was saying earlier. The lessors are able to pass through their cost of fund a little bit better. So I'm reasonably optimistic for the near term. I think it's a good market to invest, and we are investing in this market, both in terms of our balance sheet capabilities, distribution. Also, we're trying to find new investors. We organize an MUFG aviation conference now every year during the air show, where we bring together clients and investors. And we had 350 people last year during the Paris Air Show. We'll do the same during the London Air Show as well. I think it's a good market to invest. You have to go there with your eyes wide open, and if you do it with the right people, the experts, people who have done that for a long time, and people who have really a high level of expertise in the aircraft, in the market, I think you're in good hands.
Yeah. Well, on that optimistic note, Olivier, I'd like to thank you on behalf of KPMG and Airline Economics for your time and insights, and wish you and MUFG a very successful 2024.
Thank you.